Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right, we're back for another episode of the Mortgage Broker Podcast, continuing on with our Behind the Lender series. Very excited to have this guest on today. He has flown right across from Toronto just to be with us, and we're talking everything RFA, Bank of Canada, the alternative lending channel. This is Frank Giacomini. Did I mess that? Well done.
You did good.
Okay, perfect. Frank, thank you so much for being here. I got Jason hosting with me today, and we built a really good relationship with you in a very short period of time since you took over RFA Alternative. And yeah, we just love working with you, and we're really excited to dive into this and just, share everything that's going on with RFA now and in the future. So welcome, and thank you for being here.
Thank you so much for having me, guys. It's a real honor. Appreciate it.
So let's get into your background to start. Who is Frank and your history in the channel? I mean, you've told me some stories, so I can't wait for our listeners to hear some of it.
All right. So I will try and keep it short and sweet. And for those of you that know me, I don't keep anything short and sweet. I got into banking almost by mistake. It was a part-time thing while my parents were going into, put it this way, I had to sign on a mortgage because they couldn't sell their house. And so I took on a part-time job. I come from a construction background. I come from an entrepreneurial background. My parents were business people. My dad, with his brothers, had an Italian cinema and a grocery store. Well, lo and behold, I get this banking job, and it's a part-time thing. And in my journey, I would tell you that I was ready to leave. I'd already applied elsewhere. I was going to go do something else. And I got into mortgages. And when I got bitten by the mortgage bug, that was it. The journey itself, I started at ING Direct. I was hired September 9/11. For my 1-year anniversary, they blew up the trade center.
Wow.
So that was my anniversary date. But within a year and a half, I got into the mortgages side. It wasn't about 2003 that ING Direct bought First Marathon. And that's when we discovered the brokers, and that just changed my life. So from there, I went ING Direct. I left the corporate side for about a year and a bit. I was with another mortgage broker. So I was a mortgage agent for about 14, 15 months, and young babies at home. They call me Frank the Bank. I belong on the bank side. I went back to the bank. I did 10 and a half years at Optimum Mortgage, and I've been here since March and loving the journey so far.
Was it always the sales side of it that you're interested in, or were you kind of looking at more of the strategy piece? Like, what kind of got you into the sales path that you're on now?
Yeah, great question. I would say I would never want to be a salesperson. I always think of sales as, the used car salesman. So no, I didn't start on the sales side. I never saw myself as a sales side. I started as an analyst. I was always a leader, always from a leadership side, even before, I'd work at Royal Plastics and I was a leader there. So I was always on management side. But when I became an underwriter, I absolutely loved that. Within a year and a half, I became a credit manager. And then the BDMs decided to take me on the road now and again. And I think, truth be told, they took a little bit advantage of me. They didn't want to do their presentations, and I said, do the presentation. And it worked for me. I enjoyed it. I loved it. And from there, I realized, wow, I think this is what I want to do. So the sales was, I almost want to say again, not planned. Never thought I'd be that. And even today, I never sell a thing. I just coach my people. I really try and find the best solution. And even as a BDM, I never went out there and said, oh yeah, it's only us. Absolutely not. If it didn't fit, I was always honest in saying, hey folks, this one's not for us. Try A, B, or C. I know they do that. And I think it's so important to be transparent and genuine with your clients. And I think that's what served me well.
Well, I always found that some of the best BDMs in the industry were BDMs that have come from a credit background and really understand how to structure a file and review credit. And to your point, I mean, maybe this is a lesson to some of the BDMs out there is know what people are doing. If you're the source where your brokers are calling you, and if it doesn't fit with you, you know where it may fit. I think that puts you one step ahead. I mean, if you can get brokers phoning you and you're the primary point of contact, you're always going to win in the long term.
Absolutely. I will tell you the funniest thing. So yes, be the first call. Be the first call, even if it's directing them. I had calls, so I'd gone from ING, and for 15 minutes I was at Exceed. And then ING calls me back. So within 7 months, I'm back. And there were brokers that would call me. And the first thing is, hey, Frank, I know you're at ING, but I have a question for you for Exceed. So it's so important to build that trust that they know. So I completely agree. Study what your competition does. That's an important piece of the job.
Yeah, and I mean, too many BDMs don't even know their own product, let alone the competition, right? So to be able to build that trust starts with you got to give something, right? And we know like our best BDMs in this region are that first call because the broker knows they're going to get a recommendation or two if it doesn't work. So I really value that in a big way, and we talk about that a lot. I'm curious as like any key experiences over your journey that led you to this role that you have today, more so at being in the alternative channel. Like, was there anything that made that pivot for you?
Okay, so being a leader thing, if anyone wants to be a leader out there, I applaud you, and you should have your head examined. It is the hardest job you will do, and it is so gratifying. It really is. I mean, it's hard work. I've been in a bank 25 years. We did a lot of leadership courses and whatnot. Why I was a leader, I think a good leader is selfless. My day starts when their day is done, and then I do what's the administration. So as a leadership, I want to tell you I was pulled into the roles more than I asked for them. Because being a salesperson and being a BDM might have been the most fun I've ever had in this job. It's hard work. You do stay away from your family, but oh my God, you're talking mortgages all the time. You're building relationships. And if you're someone like me that likes people, that's not a job. I never worked a day in my life when I became a BDM. It's what I loved. Now, to say what was the step that got me into the sales leader? I think as a leader, I was a natural because, again, I'm trying to take care of people. It's my job. And I could tell you, even at a high school level, my friends knew I was everybody's dad. I was always there to look out for people. So when you can gain that trust with your brokers, that's why I'm going to get the first call, because they know I'm going to do the best for them. It doesn't mean I can do everything, but I'm going to do the best for them. What made me do the leadership sales? So at ING Direct, from a credit manager perspective, I understood the credit. I became a credit manager, and I could see how sales struggled to send the right messages, right? And I guess at the end of the day, the best advice I've always given my teams, I've been a credit manager twice, I've been a credit sales leader 3 times, and I always use the same line. If you're in credit, you better have your sales hat on. If you're in sales, you better have your credit hat.
Totally.
Great point.
And I would say that when I figured that out, it was a lot easier for me to say, it doesn't matter where I am. I want to do the sales. It's harder. It's a lot of fun. And the relationships for me are the most important thing. And I know that I can come to you and say, hey, what's not working? How can I make it better?
And like, I'm curious because you spent just over 10 years at CWB, which has mainly been a focus of alternative lending. And now with RFA alternative, is there anything in particular that is interesting you of that space, or like what drew you to the alternative channel?
Great question. Okay, so there was only alternative, and I'm not going to lie to you guys. I went from a conservative A at ING Direct, and I went to the alt side, and I was closing my eyes when they were saying yes to these deals. It's like, you can't do that. That's crazy. 6 months later, you could never get me back to the A side. It became the common sense solutions, and I think that's what I took from it. Life happens, and it's great to be an alternative lender where you can make things happen that your branch on the corner cannot. So I love that part of it, the common sense about it. Why I came to RFA, I think part of it is because when I started with ING Direct, we were the little engine that could. They had just started, and they never even did the broker channel when I started there. And I was one of the leaders to help with policy, help with sales, do presentations, bring on product. Fast forward to Optimum. I was a leader, both credit leader and sales leader. The product development, I think a lot of it was there. They already had a history. And yes, I was able to help drive the business and shape our business. But when RFA posted, I think it was that thrill of saying, well, on the outside, these guys are really, quite young. There's a big road ahead. And I just thought that, what I've learned along the way, I can help to bring some context, some process, some policy, maybe convince them to do products. And that was the reason that I jumped in. I did see them going from the little engine that could to the big engine. And that's where I want to take the RFA Bank side of it, be part of that.
Well, I think it's kind of cool that, you just take and wrap up all the experience that you've had in the past and then use it to drive forward something that you're taking, again, not from ground level, but building it into something that you see a vision for because you've seen it kind of how things morph from the past. That's pretty interesting. I mean, I talked to some of our alt BDMs and I like being a problem solver. It's not just cut and dry. This is the policy. This is what the investor wants. It's actually solving problems and, helping kind of grow something and morph through that. So yeah, I think that would be pretty appealing.
Yeah. And, it's a good segue just into the institutional overview of RFA Bank of Canada, to be specific. And, what's the mission? What are the core services, the alternative division? How does that fit into the bigger picture of RFA?
The mission, I think, is simple. You really want to be the top choice for your alternative clients. And going back to alternative, why alternative? Because life happens. Like, not everyone has a salary job and they get a raise all the time. So the nice thing about what we do is we do the bruised credit, we do the BFS, we have longer AMs, we use contributory income. With affordability going the way it has gone, you need all these tools to try and afford a home today, right? So being part of that journey with the RFA Bank is absolutely imperative for me to be here. And I love that we're part of those solutions. Our mission, become a top choice for alternative clients. And what does that mean? I guess the best way of looking at it, our clients are the brokers and the agents. Absolutely. And the way I think about the journey, so enhancing the customer experience is two things for me. It is making your life easier, making you guys be remarkable in front of your clients. Because if I can help you guys be remarkable in front of your clients are going to keep coming back. Yeah. And if you can build that consistent, loyal client, you're going to be coming back to me.
For sure.
So that's step one. Step two, and this is something I learned from ING Direct, focus on the borrower. Yes, you're my client, but how am I going to make you remarkable if I can't help the end borrower? Yeah. So with everything that I take into the room with my leadership, it is to say, folks, we got to embrace the client. I know we have to take care of Jason and Dean and his team, but they have consumers at the end. Remember that. And from there, what products are we going to do? Because that's what they're going to remember. And that's when they come back to you. It's such a simple thing, but the penalties. I'm going to take you guys 20 years back, maybe more. ING sold what? The unmortgage. What is an unmortgage?
I'm not even, that's before my time.
That's before your time. Fair point, Dean. Yes. But all the unmortgage was telling their consumers that they can be mortgage free faster at a lower cost. That's really what it came down to. The best prepayment privileges and the lowest penalties in the market. They didn't have posted rates. The branches did. Okay. Yeah. So fast forward, and maybe one of the intriguing things from speaking to colleagues that were at RFA before I got to RFA, their penalty structure. It is the most flexible in the entire alt market. 2% in the first year and then 1% in the second year. If you compare it to all my competition, we are cheaper.
Yeah.
But not only are we cheaper, we are more flexible. And we know that some of these other lenders, and this is the big banks, the little banks, all of them, they want to keep you, so they make it very difficult to leave. In us being that way, it provides even the peace of mind for you to saying, hey, I'm going to put them in a place where if they need to leave, they can leave, because life happens and you don't know. So I take that to drive everything that we're doing. So we're going to come up with products next year, the year after that, whatever. Focus on the borrower, and that will help you guys be remarkable, and that will help you guys be loyal to us.
I like that. I mean, it answers my next question without me having to actually ask you. Just how RFA differentiates itself from other lenders. I mean, that's it.
Absolutely. Yeah, no, and that's a good point. I think the penalty itself. So, and maybe I'll explain it. So most of them use IRD. We have 2% of the balance. That becomes considerably cheaper than most of my competition. In the second year or further, it's only 1%. Again, cheaper. Now, you guys were at the DLCG.
Yep.
And you heard one of those speakers that said 67% of clients would like the flexibility to move. 67% of, I think, 2,800 people surveyed would pay for that flexibility. And here we are giving it to you for free.
Yeah.
Right?
I mean, it's a huge piece to highlight as a broker, especially a broker that is now just getting into more alternative lending, private lending, because, let's say 5 years ago, there was a ton of agents that just never even touched an alternative file. They just did all their business in the prime side. And with everything that's gone on in the last 18, 24 months, if you're not in this space and learning it and working it aggressively, you're going to fall behind as a mortgage broker. So to be able to highlight a massive piece like that will help you sell what you're selling. And, selling fees, all that could be new, but to be able to give something away like that, it's significant. I think agents should really pick up on that.
Absolutely. And I mean, another piece to that. So we have a 35-year end that helps affordability. We allow contributory income. It all helps in helping our clients get into that home.
Well, I mean, to your point, like every client has their own personal circumstance, right? And like I see where the market's going, and the circumstances that clients have are changing rapidly. And it's not just that one size fits all. Like everybody's got concerns with affordability, concerns with what might happen with their jobs, like AI, like all of the things. So having that flexibility in those pieces that you can actually present to your clients, I mean, to me, that's something that we should be touching on often, as opposed to just rate.
As opposed to just rate. Absolutely. Ask about the no frills brokers, right? The no frills and what it means to the consumer.
Talking about no frills, I mean, we got burned on that in our first couple of years as brokers, not knowing what we were selling and, finding out 3 years later, the guys sold his house. We have an approval at another lender. And, there's some major issues there, right? Or even worse, refinancing, and you can't move it.
Right.
Yeah. So, couldn't agree more. And so for me, this is a good segue just into the behind the scenes at RFA. And, not to go too granular here, but I always find it funny whenever one of our agents reaches out and says, hey, I submitted this deal, 2 hours ago to RFA. I haven't heard back. And it's like, hey, how much work went into taking your client and all the documents and everything. It's like, well, there's people on the other end of that phone or submit button. Maybe you just walk us through, what does that day look like?
Absolutely. So firstly, the platform we have today, come January 1st, won't be there. And we're hoping that the newer one is quicker, faster, sexier, has more bells and whistles. Maybe not the out-of-the-box product, but that's where we want to land. So how it happens today is you submit your deal. It doesn't matter what platform you're using. Basically goes into a hopper and comes into our system. And within our system, it hits the leadership side. And the leadership, and when I mean leadership, I mean credit ops. Yeah. So credit ops will distribute the deals so that everyone gets, let's call it a fair share, right? Typically that is happening though. What we receive today before, forgive me, I believe it's 3:00, gets handled today. Everything else goes in tomorrow's workday.
Yep.
Documentation today, it is via email. We have a portal that we hope to have launched by the end of the month.
Oh, wow. Okay.
And that will mean that you will be uploading your documents so that it's real time.
Yeah.
And unfortunately, emails sometimes get lost. Sometimes they're too big and we don't receive them. So that should help us be more efficient, you be more efficient, and see where your deal is. Did we get the document? Because that's the other problem with email. Sometimes, it doesn't work. So those are two pieces, but that should be real time. That will help for the documentation piece. From the actual underwriting application, that will continue to be anything before 3 p.m.
You mentioned docs and, ingesting the deal. Who are the people looking at that? There's obviously an underwriter that's picking up that file once, it's deployed to them. And then I'm assuming there's a document specialist that comes into the mix as well.
Correct. So different lenders do different things, but for the most part, especially on the alt side, it is very similar. Appraisal and income or BFS income, so business for self income, stays typically with the underwriter. Okay.
So even from a doc perspective?
From a doc perspective, the rest of the documents do go to the mortgage fulfillment officers. They review it. As the mortgage fulfillment officer looks at their documents, they will send out a checklist to saying, we've checked off A, B, and C, D, E, and F are still outstanding. Underwriters, the same thing, the pieces that they're looking at. Typically what happens, the underwriter will look at the whole deal, not necessarily see the documents, look at the deal from an application form and saying this works if. And if anything substantial changes, it typically goes back to the underwriter to saying, we didn't get A, we got B. Is that enough? If not, that's when the underwriter will say, I'm now going to need C. So they will change a condition. And so that's a lot of times you'll see where we may have to change a condition because what we asked for, the bank statements didn't support it. The letter of employment told us part-time or the overtime is only 1 year. That's a very popular one if overtime isn't always supported, especially on the A side. The A side wants to see 2 years of that history, right? Yeah. Us alternative lenders have a little more flexibility with that. But that's essentially how it goes. If there needs to be an exception, so whatever the exception may be, something is just a little off, that typically goes to the credit managers. The credit managers are divided into, we have two at our office. Georgia and George have their own teams. And then Juliana will have the mortgage fulfillment specialist. They all report into Vincent Croce, which is the VP of credit.
And so, I mean, that leads me into that decision-making process. And so that's clear when there's an escalation. At what point, let's say the underwriter's looking at the file and they're like, this is just not going to work, so I'm going to decline it. Is there another filter that would look at that file if the underwriter just arbitrarily chooses to decline it? Or is that just ultimately, it was their decision, it goes back to the agent at that point?
So the newer underwriters, of course, I think we all have a lot of turnover in our industry and there's not enough underwriters and fulfillment specialists. But definitely the newer ones, it does get a second set of eyes, without a doubt. No, the ones that are experienced, they've been around, we absolutely trust their decision. But we also are very good at picking up that phone and saying, hey, Jason, here's your deal. This is what I got. Is there other contributory income? This is what I'm seeing. Can you give me something else? What else will make it work? And if we can't talk through it, then yes, they might decide. But very rarely should we be sending out a decline without a conversation.
Are they trained to call the broker to walk that through after they give a decline? Like, is that kind of normal protocol that they would go through to reach out and call the broker to speak that through and see if there's any alternative ways?
Absolutely. Absolutely. Unless it's a 400 beacon blind score.
Yeah.
We don't do 400. Like, if it's a slam dunk and there's nothing you can do, the letter of employment came back and he doesn't work here anymore. I mean, you still get the advice, but I guess what I'm trying to say is we would rather connect with you before the decline in case there's any information that we're missing. And we're very good at asking for that before the decline. And if for whatever reason we do decline it, we will open it up again. A lot of those get escalated to my team, the sales team, and we're in communication. So the underwriter, the fulfillment person will email or have the discussion with the salesperson, and the salesperson will take on that decline and saying, well, here's why. To reopen that case, we will do it.
Yeah, we've been fortunate to have really good underwriters on our files at RFA, and we haven't dealt with any issues, and that's not why I bring it up. It's just more curious for the agent that's submitting it to know that, hey, it's actually being looked at with, not just an experienced eye, but an eye to like maybe find other ways to make that deal work. And, I find like the biggest reason that kills a file is something wasn't disclosed, like something, was forgotten about or was just blatantly not, disclosed by the client or the agent. So sometimes, just digging through and maybe there's an extra 3 conditions on that file, but it's to get the file done, right?
To get the file done. It's the one thing I will tell you. If I had to pick the biggest point of contention with the agents and the brokers, it's the lender coming back with other conditions.
Yeah.
And I would tell you, you should flip that, because if we're coming back, it means we want to do this deal.
Yeah.
So we have to be compliant. We don't have that choice. We're regulated by OSFI, and if we're not compliant, we get our wrists slapped. So if we're coming back to you and saying, hey, I looked at the bank statements, there's a $50,000 deposit, I need to source it. It's not to say goodbye. It's to say, I want to close this. Please source it because we want to close this for you.
And I think that's a great tip for just how a broker is communicating to their client, because a lot of times that communication is going from the agent to the client, and the client's like, what's going on? They seem like they don't want to do this. It's like, no, like that. You need to frame that as they absolutely want to do this deal. They're trying everything they can. They need to get this across the finish line. Here's what they need. Let's do this, right? Opposed to, I'm so sorry, they're asking for this or what have you, right? It's just how it's framed. And again, like we talked about sales, it's like we used to talk to our fulfillment team when we were brokering all the time, like asking for documents is a sales tactic. And how you frame it, how you position it, it certainly needs to be done with a sales approach.
Yes. And you know what? I think the other piece I would give too is you don't know what you don't know. Yeah. So I think if I'm asking whether it be my underwriter or my fulfillment person, what I need, if they don't have that, what else will work? What else will suffice? Yeah. So if I don't have the T1s, how about 12 months bank statements? How about the statement of business activities? How about the CRA taxes showing that they've been paid, right? Like other options rather than the one that they come to. Unfortunately, we are all like pressed for time and we come with one solution and sometimes that one's going to work. Be proactive and ask, if not that, what is option B, option C? Yeah.
I think this is such a good point that, you try to listen to sessions like this and have a takeaway that comes out of it. Underwriters coming back, asking for additional documents. They're not trying to be a pain in the ass. They're trying to get the deal done, to your point. So let's reframe your mind. It's not they're trying to look for reasons to decline. They're trying to look for reasons to approve. So if I'm listening to this and I'm a broker, that's a massive feedback item I'm taking out of it.
Totally.
I like that.
Hey, quick break from the show. And before we get back into it, I want to tell you about something I'm really proud of. We've just launched a free 5-part webinar series through Mortgage Masters Canada. If you're a mortgage broker in Canada and you've ever felt like you're doing everything yourself, working nights, working weekends, and still can't seem to break through to the next level, this series was built for you. It's called the Canadian Perfect Loan Process. It's the exact system that Derek Williamson and I used to scale our book of business to $500 million in just 1 year. And we're giving it away completely free. 5 sessions, real systems, lead generation, outreach, tech stack delegation, alternative lending, no fluff, no sales pitch, just the playbook. The series is running right now. Sessions are every 2 weeks, so there's still time to jump in and catch the next one live. Head to mortgagemasters.ca, that's mortgagemasters.ca, and register. It takes 10 seconds. Your name and your email, and you're in for all 5 sessions. All right, let's get back to it. So maybe let's move on to just some market trends and insights. Like, is there any key trends that you're seeing in Canadian housing or borrowers in general that's maybe shaping the alternative mortgage landscape?
Absolutely. Let's start with probably the biggest change in 2025 was OSFI implementing LTI, right? That has affected most of us lenders, and it took a while for us to figure it out. And basically all that is it's the leverage that a client can have with the borrowing power. So we can only have a certain amount of units to push on that LTI. From there, our first 3 months was a challenge. So we had to figure out how to bring in the files that will, I guess, keep us compliant. And that was a trick. So that's one thing. But other trends, so let's go back to the trends. What am I seeing? So I will say this with caution, because if you're a homeowner, you're going to panic, but don't panic. We've seen values come down. But you know what? If you take me back, has it been 5 years, COVID? If you had told me that homes would go up 30% a year over year for 3 years, I would tell you you're crazy. Mm-hmm. They weren't supposed to.
Yeah.
But we were near zero rates, and so everybody bought, and people overpaid. And people overpaid because they were afraid that they were going to lose out. Mm-hmm. So now you fast forward to normal times. And what's happened is we have seen values come down a little bit, no doubt. And I think most of the falling has come. But I wouldn't panic too much. It really is right sizing. And hopefully you didn't get bitten during this time. But if you haven't and you're looking to buy, I think it's stabilized. And that would give me a good cause to say, yeah, it is still a good time to buy. the reality is we're still very short of properties nationally, right? Nationally. BC and Ontario are probably the worst. And actually, from a depreciation level, BC and Ontario, less than 1%, we have come down the most. So that is all that it is. It's 1%. Hopefully it's not your house, but it is 1%. So that is one thing. Affordability continues to decline. We see that. The Bank of Canada is helping us with dropping the values, and that 1% correction is going to help. People are using other sources. Maybe once upon a time, just your normal job is going to help. Now, everyone's got a side. Everyone's got a side job, and it's necessary. And so that's why we come with the 35-year M and we come with our contributory income. These things help. And most lenders now will go to 60-60, or sorry, on the alt side, forgive me. So that is very impactful to our business. Other trends that we see, it really is the last minute things on a file, the surprises. I think as an industry, you've been around long enough like I have. It used to be that a client was okay with getting the approval back within a week. Well, it went from a week to 4 days to 3 days to 2 hours, right? What this means is everything is being turned over faster and faster, including the mortgage agent that collects the documents and sometimes doesn't screen what they're getting. So my advice is the same for the last 25 years is look at the documents. Firstly, you need to know what is the lender going to ask. We talked about that $50,000 deposit. Well, we have to source it. And so most of the delays and escalations happen because something happens near close where the bank statements or whatever other document tells us we need to go get more details. And that could delay a closing. So we have seen delayed closings. And that is, I think, partially because we are rushing the process and partially because we are not looking at the documents with the scrutiny that we used to.
That's a good point. It just makes me think of just general borrower behavior and some of the shifts that we've seen, more so from like an affordability perspective. You know, you've mentioned some of these other, avenues like contributory income, different things like that. Have you seen any shifts in the borrower behavior more so from like, say, self-employed clients or credit challenge clients? Because the reason I say credit challenge is I found the average credit score, even with the private lenders, is like way higher than I would have ever expected. And, when I first came into the industry, I focused on private lending, alternative files, self-employed clients. That's pretty much all me and Derek did for the first 10 years of our career. And it was very common to see a 500 Beacon score. And it's not really the case anymore.
It's not. No, that's a really good point. So I can't pinpoint why credit is better. I think probably the consumer knowledge. I think we've done a really good job, as an industry to tell people to be good on your credit, because every consumer is going to be hit, whether it's buying a house or whether it's going and getting a car loan. You'd rather pay 1% versus 5%. So I think we're all educated that way. But from a lender, and I saw this at Optimum as well. So at ING Direct, it made sense that I saw a lot of 700 Beacon scores, 680. We were a conservative A lender. 10 and a half years ago, I started at Optimum and I saw a lot of what you're talking about, the damaged credit, the 500, 550s, sub 600. Yeah. And then the BFS programs, I think, changed that a lot. So percentage-wise, it's a large share of our portfolio, but they don't qualify at your traditional bank. Reason being the write-offs. We use a bank statement program rather than an NOA program. The NOA shows you the net, doesn't show you the gross ups, doesn't show you the write-offs. So our program is much better for your client. And I would tell you, one of the things that I think is so important is taking a few minutes and going onto the CRA and showing your BFS clients what it means to claim $100,000 on your NOA versus claiming 50 and then paying the taxes on the 50 versus the 100. That will convince them to take an Alt-A mortgage.
Absolutely.
Because if you're paying 50% taxes, that's a $25,000 hit on taxes versus 1% on your mortgage that ends up being maybe $5,000, $6,000 depending on the mortgage. So if you can do that math as an agent, take your clients through that journey, You will have a much easier time selling a 5% mortgage versus a 3% mortgage at your traditional A. But that also means that a BFS client that is doing well knows how to handle their credit.
Totally.
And so I don't remember our average off the top of my head. I can tell you it's in the 680 range, which is not common for an alt lender 10 years ago.
100%. And I've seen the shift in self-employed borrowers where in the early days of like, hey, Optimum, RFA, Equitable, whatever it is, that's going to be your option today because of the way your, taxes are and whatever you've done from a business structure perspective. We'd always get the feedback like, okay, well, I'll just pay higher taxes for the next 2 years, even showing the math, get back to the bank, and then I'll just stay at the bank and go back to, the regular way of doing their accounting. We talked about 67% of people are waiting for that next home and it pops up and then we're going to be in the same predicament again. So what I found from self-employed borrowers is they're almost like looking at these lenders like RFA Alternative as a forever home.
Yes.
Which is very different than what it was, say, pre-stress test or shortly after stress test. Have you noticed that?
Absolutely. So I will even go, maybe not quite 5 years, but my previous life at the previous lender, Optimum, I was surveying a lot of my clients and asking, what do you think of a longer term on the alt side? And I would say maybe 50% were, no, it'll never work because it's only a short-term solution. And the other ones that did a lot of BFS said, absolutely, you guys should be bringing in a 5-year.
Totally.
And we did bring in a 4-year at Optimum at the time. And that is, for me, on my list as well. I want to go longer term because a BFS client is probably always going to be a BFS client. They are not going to try and rehabilitate from a 500 beacon to a 600 beacon. Theirs is a write-off, saving on the taxes, etc. solution. And so to your point, if I can get a 3-year term or a 4-year term or a 5-year term, if the market dictates because we see good rates low now, why wouldn't I?
Yeah. Part of where I'm going to go with this conversation is just the broker-lender dynamics and how you guys work together. And this is a good segue is what I found with a lot of self-employed clients is they weren't educated in this space and how this works. And they would walk into, their bank that they have a private banking account at. They got lots of, liquidity, but they can't get the mortgage approved because of the way their income was structured. And they walk out of the bank like their pride is just torn. And the last thing they want to do is call somebody else and go through that experience again. Like they just don't do anything. They just stop and then they don't move on. From a marketing perspective, as a broker, like getting that awareness out that there is other products, like, it sounds easy and it is what it is. Like, just, hey, we have other options. It's like, no, like actually go granular and share some of this stuff. Get in detail. Like, hey, this is how we look at income. Like your content creation can be educational and it will pick up those people that are like, yeah, I just walked out of the bank like one of the saddest days of the year thinking I'm not qualified. But sure enough, there is stuff out there that's very comparable from a cost perspective and far more flexibility.
Absolutely.
So I just think like whatever a broker can do to educate their clients from a content perspective, and everyone's like, holy smokes, now I got to be a content creator, to continue to like be present. And that's just not something mortgage brokers did 10 years ago, right? So when we look at content, this is a good segue. It's like, what are you doing with brokers to help them, one, have more resources to your products, everything that you're doing, but also educate them and help them ultimately market with that education?
Well, that is a great question. And I will tell you that is something on our list of 2026 as well. So one of the things we are looking at is doing a B&B, basically breakfast in business. The way I envision this, and I've done something similar elsewhere, is having some of our partners have an appraiser, private lender, and ourselves, and do some education. And in that education, it is how does a broker understand an appraisal so that you can help your clients through it. The appraisers will take that part of it. The privates will do that. And then us from an Alt-A lending, one of the pieces that I guess we used previously is really that conversation I was having. Do the math for your clients. So if I can provide the tools to the brokers to show them why it makes sense to pay 1% or 1.5% more than on the A side, it's an easier conversation for you to sell. So the B&B is one thing. The presentations that we're going to be sharing are going to be rejigged to almost incorporate that the whole time. For me, That is one of the biggest pieces. And then the penalty is the other big piece. I think that should be in every one of our presentations to coach you guys, because a client doesn't know. I mean, at the end of the day, as you think about it, and I think you mentioned this before, agents know how to sell a rate because it's a number and it's easy. And so if you can say, Mr. Client, I got 3%, they're going to compare you to 3% and they'll go to 2.75 regardless of what you can do for them. But the reality is, but the branches that is going to give them 2.75 is going to lock them in, not going to allow them that flexibility, is not going to pick up the phone after 5 o'clock, is not going to help them when they're in trouble.
It's just part about, really knowing your client, and like, how can you provide strategy if you don't know future planning? Like, hey, are you having kids anytime soon? Like, when is life going to change? Because that's where that tool really helps. It's like, you might want some flexibility here, not knowing when you're going to have the first baby, or not knowing when your older parent is going to need to move in with you, or what have you, right? So the flexibility is such a key piece of the strategy.
From a leadership perspective, now you're running the national BDMs and Salesforce. Is that training that you're pushing down on your BDMs? Because, where my mind goes to is a lot of these meetings that a BDM would have is like, here, Frank, look at my rate sheets. Like, I do this, this, and this. But that messaging about how to do the math and how to speak to clients and kind of compare like write-offs and all of that kind of stuff, is that training that you guys do from a high level to train your BDMs to go and deploy that messaging out to the broker? Because I think as much as the clients should be educated on this, I think there's a lot of brokers new to industry that they could also benefit from this type of education and this type of dialogue. Like, I would take a lot more out of an hour-long meeting with a BDM having the same dialogue that the three of us just had than going through rate sheets and just general policy. So from you leading the ship up top, is that messaging that you're trying to get your sales force to deploy?
Absolutely. Absolutely. And that is something that I injected into the place that I was before. So we talk about it, but I think people are all kinds, but visual. If you can see it on a presentation, I find it impacts you more. My team does speak to it, but it is creating some of that CRA knowledge to pop it into a slide, and all of a sudden it has a different impact. So yes, to your point, absolutely.
So looking to just kind of wrap up here. I mean, this is a great conversation. You've given us a lot, so I appreciate that. Before we kind of wrap up with future outlook, what are the service standards that RFA has, and more so, how are you measuring the success to ensure, stronger broker satisfaction, just building upon those relationships?
We are doing our best to get back to you within 24 to 48 hours, approve the application. And sometimes it's just getting back to you and saying, hey, I like your deal. I have a couple of questions. We get the answers. We go back and then we try and give you the commitment within the next 48 hours. The documentation is about the same. It does take a little longer, and who's kidding who? Month end always. We go from 48 to 72. Apologize in advance. I think most busy lenders are going to apologize for that, but it does take time. And I will tell you, one of the trends I didn't mention is there's way more surprises on every deal. Right? Yeah. There is way more surprises on every deal. So the scrutiny on each deal, I know this from other lenders as well. There are no easy deals. And part of it is because of the side hustles and whatnot. So 48 hours approval, 48 hours documentation. You want to see the volume increase. And we have to grow slowly, measured, right? So year over year, we are up. Maybe not as much as we want, but we're very happy.
Yeah.
And we want to continue to do that. So that is definitely a success. The success with the clients that we were successful last year, nothing makes me happier than to know that you guys year over year are actually higher.
Yeah.
Right?
Yeah.
And then another measure, and this is one for me that I take away and take big heart, the amount of applications we have to look at to fund the deals.
That's where I was going with that, was more efficiency.
The efficiency is so important. So folks, listen, a lot of things are measured. Approval ratios. Do you understand what we're selling? And it's not just you. I will tell you, I very much look internally and saying, yeah, but if they're not getting it, is it them or is it us? Right? You have to think about it this way. My competition is 10. And if 9 out of 10 of them are doing A and we're doing B, the reality is you guys have 100 lenders. So why are we B? And if we are B, it better mean that there's less resistance to get to us. So I guess what I'm trying to say is we want to make sure we're in line or ahead of the game.
Yeah.
Right? That affects approval ratio because you might think it fits with me, but it actually fits with my competition. And I'm happy to tell you that and you go there if it doesn't fit. But I need to do a better job of telling you what fits. Sure. So that for me is application to fund. But approval is understanding our product. And so we are looking at tweaks in our product offering to make sure that we look like the other guys in some ways. Not in every way, but in some ways. The coaching comes from a team. We are expanding. So I've gone from 2 to 3. I expect to go from 3 to 4 more broker presentation sessions, a little more structured. We work really closely with marketing and send out different reminders, rate sheets. I think it's important that the brokers know where to find the information. And even more important to know that I have the best sales team in the world. Just call them and try them out. Yeah. They will help you. They will help you how to structure it. And that will improve efficiency. And then I think just like more presence. I think like going back to the B&Bs and something that I want to do. I think it's a wonderful offering, but it's a time to educate, right? Finally, I do a lot of feedback. I talk to you guys, my other brokers. I listen intently. I come from an entrepreneurial family, and they would not be successful if they did not listen to their clients. That for me has always been the driving force. Some stuff I cannot do. I cannot give you 100 GDS, TDS. The compliant people called OSFI, they won't let me.
Yeah.
But something that we can stay within line, and sometimes it's process, sometimes it's product, sometimes it's rate. If I'm listening to my clients, you guys are the foot soldiers. You know what your clients need. So if you're letting me know what your clients need, I can work with my leadership team and pricing committee to get you what you need.
I love it. Yeah, I mean, that's a great answer. And essentially wrapping up this conversation, I'd love to get your perspective, your forward-looking perspective, especially somebody that's seen a lot in this business. Are there any industry trends RFA is monitoring closely? And, further to that, how is that going to potentially impact, how you're going about your vision and mission?
I mean, the industry trends, I think every lender is the same. We're very in tune with what's happening with values and what's happening with jobs. Let's start with the A lenders. The prime lenders, they actually look at the borrow before they look at anything else. From an Alt-A perspective, we're looking at the property before we look at the covenant, because we know that these are clients that are not on a fixed income sometimes, that sometimes have poor credit. So for us, the property is everything. We understand that we may have to take back more properties than an A client might. So looking at values and knowing the trends that Ontario and BC has gone down a bit, we're probably the only lender right now that is still doing 80% on a condo. But how long can that last?
Right.
With what's going on in Ontario specifically and especially, we recognize that, we'll go to 80, but it's got to be a top shelf client where maybe it wasn't. So values are the most important thing, I think, for us. But other trends, I mean, the market will be the market. It will continue to flow. We will continue to evolve, and we're hoping to come up with more products, expand on the product offering that we have. And some of those things are the necessities, like looking at a bridge product. I think it's such an important product. People do not move the way we used to 20 years ago. They move on the same day, on the same weekend. So a bridge product is very important. We think that'll help us be more successful. Potentially an ELV, something like that. So we are looking at other products. I was speaking to you about longer term. For the BFS clients, that is so impactful, I think. We're about to hit the bottom of the barrel again, possibly on rates. We see what the government is doing. Why don't I take a 5-year if that's an option?
Yeah, couldn't agree more. All right, to wrap, any advice for brokers, just in general, or maybe preparing for some of these changes? I mean, as a mortgage broker, we just live in a world of change. Yeah. So it seems that way, at least for the last 8 years or so. Yeah, any advice?
Yeah, for the 25 years, the broker channel has always been apparently going out the door.
Yeah.
I've heard that since the time I've been here. And the reality is, and all of us do this, I mean, we're egocentric. And so when mortgages become more difficult because of the regulators, we all get scared. Don't be scared. I actually have to tell you that OSFI has done a huge favor for the broker channel. The more complicated the deals become, more experienced people are the brokers, and the expertise lies on the broker channel for the most part. And so the A lenders and the other lenders are not going to pick up the phone after 5, are not going to understand the, I guess, complexities of what's going on, whether it be LTI, whether it be 60/60, the BFS product. All those things are so secure in the broker channel that I would say, don't be worried about it, but go out and market yourself. Market yourself, put yourself in front of the people that know what you do and need that hand-holding. There's never been more hand-holding, I think, in my history that I've been in this business. And that tells me we will continue to be successful.
Totally agree.
Couldn't agree more.
And I think a key piece for brokers is realizing the partnerships that we have. If we can call people like yourself and your BDM team and really educate ourselves, to one of your points earlier, ask questions and listen to the answers, educate yourself, know how to work with your clients, know what all of our lenders are doing, and that's going to just put you on the upper path moving forward.
Absolutely. And let us know how we can help.
Yeah. I mean, Frank, this was awesome. You're a pleasure to chat with as always. We really appreciate your support coming on the show, everything you're doing for us at A Better Way. So thank you so much for coming out.
Thank you. Thank you. Real pleasure.
Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2025. This remarkable organization addresses a hidden hunger issue many are unaware of in British Columbia. While school districts provide meals during school hours, numerous children face food scarcity at home, particularly during the weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening and see you on the next one.